Good morning. The markets are moving and so are you from the BizNews studios. This is BizNews Daybreak for Tuesday, the 20th of January, 2026. I'm Alec Hogg. Here's the context you need to win the day. Growing tension between the United States and its closest allies, the European Union, leads this morning's headlines from our partners at Bloomberg, while there's also news about Netflix and Apple. Here's the very latest from Doug Christner.
Some European leaders are taking a stand against President Trump's threat of new tariffs. Now, Trump announced a new 10% levy on 8 EU countries opposed to his plan to seize Greenland. In response, French President Emmanuel Macron intends to request the activation of the EU's strongest trade countermeasure. However, German Chancellor Friedrich Merz is trying to persuade Macron to tone down his response as Merz attempts to de-escalate tensions with the U.S.
We do not want this escalation. We do not want a trade dispute with the United States of America. But if we are confronted with tariffs that we consider inappropriate, then we are in a position to respond. And that is precisely what we will be discussing in Brussels on Thursday.
That is German Chancellor Friedrich Merz speaking through a translator. The International Monetary Fund has slightly raised its outlook for global growth this year. However, the IMF also voiced concern about a bubble in artificial intelligence, as well as tensions, both trade and geopolitical. Here is IMF Chief Economist Pierre-Olivier Gorinchas.
Global activity continues to show notable resilience despite significant trade disruptions and heightened uncertainty. According to our latest projections, global growth will hold steady at 3.3% this year, an upward revision of 0.2 percentage points compared to our October estimates.
That is IMF Chief Economist Pierre-Olivier Gorinchas. Meantime, the next Fed meeting is just over a week away. Here is Stephen Stanley, Chief Economist at Santander U.S. Capital Markets.
What we're seeing now is the Fed has moved into pause mode. And there are at least some on the committee that would like to move further, I think. But what you heard from Powell in December, I thought was really important, where he said that the rate is now within the plausible range of neutrality. So there's no urgency to move.
That is Stephen Stanley of Santander. After the closing bell, Netflix is set to report its fourth quarter results. We know the company is facing a fierce takeover battle for Warner Brothers Discovery. Here is Bloomberg analyst Geeta Raghunathan.
I hope the focus really turns, and this is a distraction, from this whole drama that we've seen. But fundamentals wise, you're absolutely right. The company has never been in a stronger situation. We think they will absolutely deliver on their revenue growth expectations of about 17%. Strong operating margin, strong free cash flow. They're expecting about $9 billion for the full year.
That is Geeta Raghunathan from Bloomberg Intelligence. Apple is once again the number one phone manufacturer in China. More from Bloomberg's Erica Herskowitz.
The jump comes after shipments of iPhone 17 devices soared 28% during the holiday quarter, with Apple's handsets accounting for 1 in every 5 shipments, despite a worsening shortage of vital memory chips. The growth comes at the expense of Huawei Technologies and Xiaomi, both of which experienced double-digit percentage declines. Overall shipments in the world's largest smartphone arena fell 1.6%. Erica Herskowitz, Bloomberg Radio.
In this program yesterday, we shared insights from star historian Niall Ferguson, who opined that Donald Trump's erratic behaviour is actually a carefully crafted strategy. In an in-depth interview that I had yesterday with investment guru Piet Viljoen, I asked the ReCM founder what he thought of that.
He's always described himself as a deal maker, and what he's doing is the art of the deal. And one of the things in deal making negotiations, one of the first things you learn is you have to put the pen in the ground very far in excess of what you want. So that when you start negotiating back, you can possibly end up in a better position than you had hoped for at the outset. It's the same thing as the insanity type argument, is that you go crazy, you say all sorts of things, and they end up in a position better than you started out, but not as extreme as you were talking about.
So let's look at Greenland as an example. The whole of Europe is a titter by the fact that Donald Trump has said, we want Greenland. We will acquire it. There are people saying, well, here's a real estate guy, and this will be the biggest real estate transaction in history. So maybe that's something he wants in his epitaph. But do you think that he's really just trying to get the Europeans to help him to defend it against his enemies, Russia and China?
It's very hard to think of a rational reason for this. It could just be that he wants to become known as the president that acquired the 51st state. Just have that on his CV, so to speak. It could be as simple as that. Or it could be, that there are possibly, and I don't know this, but there are possibly rare earth or lots of rare earth minerals in Greenland that the US can exploit to rebuild its supply chain into the defense industry and that sort of thing. That it could be strategic for that sort of reason. It could be strategic just from a geographical point of view, as you point out. There's any number of reasons why you would do that. We wouldn't know. It creates massive uncertainty and exploits that uncertainty. And again, I think it makes investors uncertain as well.
And man, this is a man from this windy little town called Yaku. Sorry, other way around. Yaku's from Hermanus. Yaku, we need to talk about your upgrade problem.
I don't have an upgrade problem.
2 Audis, an Opel, a Kia, and a Hyundai. It's 5 cars, Yaku. Denial.
I just love cars. And we buy cars that make it so much easier for you and convenient to sell your car. You want to try it?
Okay, just once. Turn off the cameras. I see how this is addictive. Take 2 of those. WeBuyCars, the easiest way to sell your car by far.
Bringing that whole concept home in the Neil de Beer Sunday show this weekend, my colleague Chris Steyn asked popular guest, retired US intelligence analyst Colonel Chris Wyatt, what he would do if he was responsible for deciding what happens now after the Iranian participation in the war games off the South African coast has caused such conflict. It's just the latest flashpoint for friction between Pretoria and Washington.
Now, Chris, if you were president of South Africa, would you move to repair your relationship with the US, or would you dig in your heels?
Well, it depends. If I suddenly became the president of South Africa today, I would allow the exercise to continue. I mean, there's no reason to insult the Iranians intentionally. Let them finish the exercise, and then let the Chinese and Russians. But that would be the last time we do that. There is no BRICS military agreement. Calling this a BRICS exercise is a joke. There's no such thing as a BRICS military. There's no defense sharing, no defense agreement. There's not even a status force agreement between any of these countries, to my knowledge, where troops can go and train as such. Maybe they've made an ad hoc one for this exercise. For my first step would be to let that go. My next step would be, yes, to repair the damage. I would stop attacking the United States, and I would stop taking public positions that harm its interest. Now, that costs South Africa nothing. To simply stop attacking the United States costs them 0 rand, nothing. It doesn't hurt you. It doesn't even hurt you in the eyes of your friends in Moscow or Beijing, unless you're a proxy for them and you're executing their foreign policy. Now, that's a whole different story. We don't know that. But if that's the case, then it does put you in a bind. Because if they're expecting you in Tehran to say and do these things, like file a case against Israel in the ICJ, and you don't do it, you might be in a bind. But if you look at the trade between Russia and South Africa, it's virtually nothing, almost nothing. It's a rounding error, if that. China and South Africa is significant. It's the largest trading partner, but very little benefication. Most of its raw materials being shipped to China, where they process the things, and then they send you back industrial goods, which gives you a serious negative trade balance, which is not something South Africa can afford. Whereas with the U.S. and the European Union, with the U.S. anyway, you have a surplus, and you're getting benefication of producing finished goods that really help everybody across the economic ladder in South Africa. So I would stop attacking the U.S. and go from there. And I would appoint an ambassador to the United States, one with some gravitas, one that actually can walk and chew gum at the same time without intentionally insulting the United States in private or in public. I mean, look, I'm not trying to tell this other going to suck eggs, and I'm not a fan or I'm not a detractor, but names like Tony Leon or Trevor Manuel come to mind. These are 2 competent, they're both getting up there, a little long in the tooth, but both of them are capable, especially Trevor, he's a bit older. But I mean, someone like that would actually take this stuff seriously. I would also designate a trade negotiator. I would send a trade representative to the United States to work on the tariffs and work them down. The South African government has reportedly over and over again said that they have sent a trade representative or trade delegation in the U.S., but where's this trade delegation? They haven't done anything. All these other countries that have negotiated with the U.S. have lowered their tariffs.
With Wall Street closed overnight for Martin Luther King Day, it was a relatively quiet session on the local front for the JSE yesterday. The sliding oil price and firmer rand, though, continued to hit Sasol's share price, the stock losing another 3% yesterday to close below 100 rand. One of the biggest winners amongst the large caps, though, was Sibanye Stillwater, which gained almost 3% on news that it is shifting gears at its Keliber lithium project in Finland. While construction there is on track to finish this quarter, Sibanye told the market that the $783 million euro investment is going to be a staged startup to navigate current market conditions. The plan is to ramp up the mine and concentrate at first, but hold off on commissioning the refinery. This strategy allows them to preserve capital and reduce risk while keeping the asset ready for the EU battery market. The market clearly liked that news. Still with local investments, the JSE's biggest bull of recent times, the man I spoke about earlier and you heard from the ReCM's founder Piet Viljoen, is still expecting a good year in 2026 despite us having a stellar 2025. Here he explains his rationale.
It's been a great year. There's been a combination of things happening. First of all, local share prices and the price of bonds have gone up a lot by 20% plus in rand terms. And then you add on top of that a 15 to 20% appreciation of the rand against the US dollar. So that adds up to 40% plus very easily for most South African assets. So it's been a banner year for South African assets. And nothing really has happened. There's been no real fundamental change except for two things, and I think these are the real fundamentals that one should be paying attention to, as opposed to politics. The one thing that has happened is the prices of precious metals has gone up a lot. Gold, platinum, and silver. Okay, we don't produce much silver, but we produce a lot of gold and a lot of platinum, and that's good for our balance of payments, which ultimately is good for the currency and good for economic growth. So I think our prospective growth rate is better than it otherwise would have been. On top of that, our interest rates have come down from exceedingly eye-wateringly high levels, bond yields of 12, 13, 14% even at one point, to bond yields of 9 to 10%. So that's a 4% reduction in your risk discount rate. So we've had two positive effects. The future cash flows that South Africa as a country are going to generate, which South African corporate share in, are higher than they otherwise would have been, given the precious metals backdrop plus low oil prices, which also helps. Those cash flows are bigger, and you're discounting those cash flows with a lower interest rate, which means the present value of those cash flows are a lot higher. And that's been starting to have been reflected in the prices of assets in South Africa. I don't think it's fully reflected, but the process has started.
And now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. And while you're there, don't forget, please sign up for the BizNews conference in March. I say please because seats are filling up fast and we are generally overbooked well before the event begins. And I'd hate you to miss out just because you didn't plan ahead. I'm Alec Hogg. Thanks for starting your morning with us. Now go and seize the day.